All right, y'all, welcome to the next session of Support and Resistance Part 2. So make sure to like the video, subscribe to the channel, and click the bell for notifications because you do not want to miss one of these free trading course sessions. And we got to give a major shout out to our sponsor, Antarctic Exchange, the best trading experience in the world. This is a decentralized exchange made by traders for traders. And what sets this apart is, first of all, this is a decentralized exchange, meaning 100% self-custody of all your assets. You're not depositing your money into another company's wallet or platform. You're keeping everything self-custody in your own cold wallet or hot wallet. And because you're doing that, that means it will never ever require KYC or know your customer. The best part about Antarctic Exchange is ownership. All traders on Antarctic will get a portion of the trading fees that the exchange makes. And there's also an opportunity for you, the trader, to be the market maker and provide liquidity to the exchange. And in return, you will receive a proportionate amount of the market maker profits, including liquidation fees. Now, this has never been done before. Instead of your typical centralized exchange where everybody's trading against the market maker, and let's be honest, the market makers are the one who always win in the end. We are fellow traders trading against fellow traders, providing liquidity to each other, and it evens the playing field. Now, if you sign up in the link in the pinned comment and description, you will get the lowest fees, period, on any exchange right now that I know of. 0% limit order fees, 0.01% market order fees. This is a great deal on fees. It makes scalping on low time frames absolutely amazing because you can market in, market out, and make big profits on small moves. So make sure right now to go sign up to Antarctic Exchange. Links are in the pinned comment and description. I'll see you over there. And as you can see, our trade did hit that take profit last night or this morning, whenever, right to the level we wanted, simply because it was a level of resistance. And so it's very apropos that we're talking about support and resistance, because we're talking yesterday how I took the long from support and how our target was a 7-to-1 risk-reward ratio to hit that TP1 at our next resistance right around $97,000. And of course, I've hit a major take profit one now, locking in about $3,000 of Bitcoin profit. And now we let the trade ride in the event of a big move to the top of the range. So I want to talk about, before we get into top-down analysis, finding key levels across multiple timeframes, I want to talk about trend lines and channels. Trend lines and channels. Because not only are we looking for those horizontal levels of support and resistance like this right here, or even like this right here, but we also can look for diagonal levels of support and resistance. These are going to give us what's known as trend lines and channels. A trend line is basically when you come over here in TradingView and you click a trend line and you just start connecting things together. All right, you just start connecting lows together and see if you can find some kind of pattern, some kind of diagonal line that the price respects. Now, I want to bring your attention to this right here. In fact, I'm going to go to the Coinbase chart because it's actually a little bit easier to see. But in general, you can see that right here, the price was respecting this trend line pretty well. We can put it all the way back here. We can see that we got a bounce, and these are a little bit subjective too, guys. I just want to bring that to your attention. These are a little bit subjective. So I recommend using these in confluence or in conjunction with other tools. But you can see that we had this trend line right here, and it was respected once, twice, 3, 4, 5, 6, 7 times, and then finally we lost that trend line, right? These are things that you want to look for. We can really zoom out here. We can go to like the weekly time frame, and we can go to log scale, and we can take a look at the entirety of the last, from 2017 all the way to our present day. You can see, yeah, Bitcoin is actually respecting this massive trend line where every time we come to the bottom, that just so happens to be the bottom of the bear market. That was the bottom of the 2018 bear market, the bottom of the 2022 bear market. And we also have a trend line on the top here where you can see that we had the top in 2017, 18, the top in 2021. And so people are speculating, are we going to see our next top at around $270,000, give or take, maybe close to 300K at the top of this trend line? All right, this is a trend line, and oftentimes what I like to do is I like to use these trend lines to find confluence with other things. Let me give you an example here. We're going to come over to our object tree. I'm going to turn off everything. I'm going to turn off everything. and I'm just going to show you that right here for the Ethereum price, we had ourselves and we still do have this trend line, right? And you can also see for Ethereum, we have ourselves this horizontal support, all right? And you can see when we got the breakout, we got to move up, and we come back down, we literally test both things at the same time, all right? This is called confluence, when there's multiple things in one location that tell you this is a key level. Actually, there were many, many things here. We take a look at the Fibonacci from the low to the high, and it's actually the Fibonacci pull. We even take a look at the volume profile of this entirety and see it's the value area high of the range. I know you don't know what volume or Fibonacci is yet. Doesn't matter. The point is that's called confluence, where there's many things pointing to one exact level. And so, yeah, draw these trend lines on the chart. Honestly, high time frame trend lines are super important. Low time frame trend lines are super important. And this leads us right into channels. All right, a channel is basically where you have two trend lines, one on the top and one on the bottom, and price is respecting both. So let's go back to our Bitcoin price action here. And I want to zoom in now to the 1 hour and look at a channel that Bitcoin was trading a little while ago. Now, the way you're going to do a channel is you're going to come over to the trend line tools and click parallel channel. Go ahead and make your magnet on so that you can come and click a high. And then you're going to take that and you're going to put it like this. And then you're going to come to the bottom, click. And basically, this is a channel. A channel is where the price is respecting the top, the bottom, and oftentimes even the midline of the channel. These are great tools. Look at how the price respects this channel. All right, we form the top of the channel. We form the bottom of the channel. We form our second pivot, and then we form our second low. Now, this is when we can actually start to trade the channel. Look at this. We come up, we get a little bounce from the midline, get a little bit of a bounce, right? Enough to honestly take a scalp. We lose the midline, we come back, we wick into it, get a rejection. We come down to the bottom of the channel, we come up, consolidation on the midline. Once we hold above the midline, we come up to the top of the channel, get a rejection, right? We lose the midline, back test the midline, then we come back down and eventually lose the channel. But once we lose the channel, look, we come to try and come back in, we reject from it as resistance. We come to try and get back in, reject from it as resistance, right? Our old theory of support lost equals resistance, just like resistance claimed equals support. And so mess around with trend lines, mess around with channels. You can do this in conjunction with your parallel or horizontal supports and resistances. So for example, we have this area of resistance right here that was resistance once, it was resistance twice. If we continue to pull it like this, obviously the level is still being respected, but look at this. You could say to yourself, wow, look, it lines up perfectly now with the midline of the channel, right? Not only are we rejecting from the midline of a channel, we're rejecting from this horizontal area of resistance that we had all the way from November 22nd, 2024. And then again, we're bouncing from this level, confluence with the middle line of the channel. And then over here, we can see this horizontal level confluence with the bottom of the channel. And so basically, when we're looking for areas of support and resistance, our goal should be to stack as many things as we can that tell us this level on the chart is important, okay? Now, I want to start getting into precise levels, marking precise levels on the chart. This is called top-down analysis, and this is how you're going to get those juicy levels like this, the 89,909, for the trade that I took here, over here, and made that profit. Now, by the way, guys, this course is sponsored by ANTARCTIC Exchange. It is a decentralized exchange that is completely changing the name of the game when it comes to trading futures, when it comes to trading perpetual contracts for crypto. And the reason why is because this is 100% decentralized, which means no KYC ever, 100% self-custody of assets. You don't have to trust an exchange to hold your money. You hold it in your own hard wallet or hot wallet. No risk of asset loss. Everything's 100% transparent on the blockchain. Deep liquidity, no slippage issues. Very low fees for the Casper crew because we have a special deal. Also, the biggest thing about this exchange is ownership. If you're trading on Antarctic Exchange, you are a partial owner of the exchange. All right, all traders get a portion of the trading fees that the exchange makes, and you also have the ability to become a liquidity pool provider, aka you yourself can be the market maker on this exchange, which means there's no stop hunts, there's no scam wicks on the exchange, and you yourself get the benefit as a market maker, where because people do get liquidated, that's part of the name of the game. If traders get liquidated, as a market maker, as a liquidity pool provider, you actually benefit from the liquidation of other traders. So if you're trading on the exchange, you're basically, every time someone else trades on the exchange, you yourself are benefiting from it. So there's a link in the pinned comment and the description of this video. Go check out Antarctic Exchange. All right, so top-down analysis. When we are doing top-down analysis, I always start on the monthly time frame. And what we want to do is we want to start on the monthly time frame, then we go to the weekly, then we go to the daily, then we go to the 4-hour. And what we're going to do is we're going to look for key levels. Key levels. What do we want to look for when we're looking for a key level? What we want to do is we want to go to the left of the chart, and we want to look for places where we see two candle bodies where the price has found a sticking point. For example, right here, you can see that the month of August 2024 and the month of September 2024, the candle bodies literally closed and opened at the same exact point. This gives us a monthly level of support or resistance. And I like to make this a little preset here, monthly, all right? And so you're going to look back and see every time this happened, and you're going to go ahead, and I like to put a little bit of array, and I like to use my magnet tool so that it sticks to those candle bodies, and you have these very precise levels to the exact dollar of where these monthly supports are. Now you can see right here, the candle bodies, all right? They closed and opened right here, that's monthly support. Candle bodies closed and opened right here, that's monthly support. Candle bodies closed and opened right here, that's monthly support. Now, this one right here is not confirmed yet because this January 2025 candle has not closed yet. If the candle closes, and let's say it closes up here somewhere at like 116,000, guess what? This is going to be now monthly support at 93,354. Now, in a bear market, you are going to be looking for monthly resistances. Look at this right here. October, November 2021, the candles open and close together. That was monthly resistance, all right? Right here in March and April 2022, monthly resistance. Now look at this. When the monthly candle of January 2024 wicks into this monthly resistance, what happens? We actually do get quite a bit of a pullback from that level. In fact, if we go down to a lower time frame like the daily, and we go back to that time, look at this, right? We actually did get from that monthly resistance about a 16% pullback. Isn't that pretty interesting? It's pretty interesting. So yeah, these are going to be key levels that you mark on your chart. And I like to give them little markers. Like for me, I use the letter M to signify that's monthly level. And these are high time frame levels. Now, the higher the time frame, the more seriously you want to take that level. The higher the time frame, like if it's a yearly level, a monthly level, you want to keep that on your chart all the time and say, man, this is a very important level. I'm going to keep this on my chart because I know if price comes down here, there's a really good chance I could look for a good trade. Now, when you're making these on your chart, there's something over here in TradingView called the object tree. What you can do is you can mark all your monthly levels, then you can click one of these horizontal rays here, and then you can just kind of hold the shift key on your keyboard, click them all, and then create a group, push them in a folder. You can lock them and then turn them on and off. So you're like, I wonder what my monthly levels are. Boom, on, off. All right. Put them in a folder called monthly. Now, very important when you're marking these levels, when the price, like for example, right here in September, we formed a monthly level. We came back to test it and immediately got our bounce from that monthly level. This would have given you the last major long to take in the range before the big breakout, right? When the level gets hit once, many times I take it off my chart. Sometimes I don't take it off the chart. This is subjective, and this basically takes experience as a trader to understand why you would or would not take a level off your chart. For right now, I want you to assume that if we form a monthly or a daily or a weekly or a 4-hour level of support and resistance, and then price hits into it, you're going to take that level off your chart most of the time. All right, so let's say price comes down, dumps all the way down to here. Then I'll say, okay, this level's been tapped. I now take it off my chart. All right, so this level, we really should take it off our chart. Okay. What are some reasons why you would want to keep a level on your chart? Well, let's say that there's a confluence there, right? Like, for example, let's say that we're pulling our fib, and this is just an example, but let's say that there is now a Fibonacci level here, a 786 at this old monthly. Then I would say, you know what? We hit that monthly once, but we have confluence there. I'm going to keep that on my chart. Okay. So after you have your monthly levels of support and resistance on your chart, we're going to go ahead and put them all back here so that we can see them. You're going to keep them in your folder. And now you're done with the monthly. You're going to go to the weekly. And when you're on the weekly chart, you're going to do the same thing, except now you're going to do it with those weekly candles. And again, you're going to look to see where did price find those two candle bodies that open and close together. You're just going to go ahead and you're going to put a ray there. Once again, I recommend you come over to the magnet tool and turn on your magnet so that when you are kind of moving your cursor, it locks to those candle bodies. All right. So we definitely have one there. We definitely have one around here. No, we kind of tapped that one. You're going to kind of move your mouse around. Did we tap that one? Yeah, we tapped it, so we're going to get rid of it. We have one up here. All right. Whoops. And we have one up here. You see that? And so if they're above us, they're going to be resistances. If they're below us, they are going to be supports. And I just like to copy and paste them and then drag them over to where I want to put them. So we have one down here at 41. And these are going to be important levels, in the event of a bear market, right? Obviously, we might not come down as low, but you want to keep them on the chart. And if you really want to do a full analysis, you put them everywhere, right? You put them everywhere that you possibly can, because those are going to be your key levels of support on the way down. So we have one here. We have one right here. We have one right here. Right? So we pretty much have right now all the major weekly levels on our chart. And then again, we're going to come over here to the object tree. We're going to hold the shift key. While we click them, we're going to put them in a folder. You can rename these folders. So you could rename this one W for weekly. You could rename this one M for monthly. And yeah, now you got your weekly levels. You got your monthly levels. And then you do the same thing on the daily time frame. All right, you do the same thing on the daily time frame. So you're going to come to the daily time frame and you're going to ask yourself, all right, where are those daily levels? Now, let's see what we got. We got a daily level right up here. All right, I like to make them orange, and I like to call them D. And then we got ourselves another one right here. Daily level up here. Then we got ourselves another one right down here, but that one obviously was hit. Now, the one I really want to bring to your attention is this one here, guys, at 89,886. On Coinbase. It was a little bit different on Bybit. Every exchange is going to have these slightly different, by the way. On Bybit, it was 89,909. This was the key level I was looking for potential long trade in the Casper Crew VIP Discord. If you are looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Boyan, man, in one live stream, dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. jasoncaspertrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. All right, I gave a little post in the Casper Crew VIP Discord saying these are the next levels I am going to be taking my long trades from. And in fact, I even told everybody that I had a limit order set there at the at that level because it was such a key level. And we'll get into why later on in the course, why this was such a key level. I'll give it to you now, actually. The reason why this daily was such a key level, guys, is because of the liquidity that we had down below. Remember, the market will wreck as many people as possible. So you always want to get in the mindset of like thinking what's going to wreck the most people, and then you kind of want to use that to develop your trading idea. So what we have here is we have a whole bunch of stop losses below these levels. How do we know there are stop losses here? Because what people do when they see a bull flag forming is they say, ooh, we're probably going to break out of the bull flag. And what they do is they put their stop losses below the last low. You know, below the last low, below the last low. And so we have 3 lows here where you know a lot of people have stop losses. 3 times in a row we came down to the low of the range and made a higher low. Every time we make that higher low, we're building stop losses that can be hunted. And so if there's a key level, like a daily, below an area where you know there are a lot of stop losses, where you know a lot of people are going to get wrecked and discouraged and say, man, screw this whole Bitcoin thing, I'm out. Those are the key levels you want to look. All right, this is why I had my limit order set there, which is how I got into this trade, right from that level. Now, let's see other daily levels that we have. All right, now what I just kind of explained to you obviously takes a little bit more experience and just kind of understanding how the market moves, and you'll get that over time. But that will come with experience. But honestly, what's more important than experience is sticking to the process. And the experience will come as you stick to the process with good risk management, right? If you don't use your good risk management, if you don't stick to your strategies, then experience doesn't really matter because you're not going to have money to trade with, okay? So, look, I'm trying to keep this as real as possible. Look at this, right? Daily level, bottom of the range here. This is where we get that big bounce from 53K. Yeah, so these are pretty much all our daily levels. And so, well, we have more, but I'm not going to belabor the fact, right? So we go ahead, we put this in a folder. We call it D. Now, optional, you can do one on the 4-hour time frame as well. All right, I usually make those green. Now we have all our high time frame levels on the chart. And now what we can do is as we're looking at our areas of support and resistance, and we're drawing our boxes and saying, you know what, in general, we have support around here, right? And in general, we have resistance around here. We actually now have more precise levels to look for the trades, right? Instead of just saying, okay, maybe this is my trading idea, where we have ourselves, we short from the top of the range, we look to take at the bottom of the range. This right here is a 2-to-1 risk-reward ratio. Let's say we're like, you know what? There's a weekly level up here, and I really like that weekly level because I could see that there's stop losses that are going to be here. There's stop losses that are going to be here. And so I'm going to plan for this trade. This is going to give me now a 5-to-1 risk-reward ratio. I'm going to take it now from the top of the range to the bottom of the range. Now we can get more precise setups here where we can say, man, this is such a precise level that I can get a better risk-to-reward ratio. I mean, this trade I took here, I had a 7-to-1 risk-reward ratio coming up to my first major take profit. The only reason I was able to have such a good risk-to-reward ratio is because I knew this is a daily level. If we lose, you know, I gave it $1,000. I set my limit order. I said, if we lose 89, which we did not on Bybit, I mean, we were close. But I did my risk management and everything calculation in advance here. If we come down to here, you know, I'm out of the trade, I'll take my loss. We come down to 89K. We didn't. We bounced from that daily level, and I got into the trade with a really good risk to reward ratio. So that's the benefit of understanding where these key levels are. And so now we know the basics of support and resistance, where you're just looking for the sideways range. You're looking for basically as simple as drawing a box around the highs, a box around the lows, and waiting for that zone to take a trade. And now we have another layer of doing our top-down analysis, the monthly, the weekly, the daily, and potentially the 4-hour. And we're looking for now those confluences where in my box are those specific key levels. And that's how you're going to find those ninja entries like this, all right? So this is top-down analysis. Now we're going to get into some more ways to find more levels. And we're going to use volume. We're going to use Fibonacci, all right? So stick around to the next session. And just a quick reminder, guys, This course is sponsored by Antarctic Exchange. Make sure to check it out. Link in the pinned comment and description. You do not want to sleep on this amazing opportunity to actually be a partial owner of a decentralized derivatives crypto exchange that is made by traders for traders to benefit everybody who uses it. We're going to change the name of the game when it comes to crypto trading. We're doing something absolutely new here. That being said, God bless you guys, and I'll see you in the next session. Peace.